Welcome, everyone, and thank you for tuning in to hear my trading and market updates. This is Uncle Frank, and I'm not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Please remember to hit the like button if you enjoyed the presentation, and be sure to subscribe to the channel so you're alerted when I have new information to share. So now let's get into the latest updates. And here's one from Reuters. Ex-Citibanker says she was fired for refusing to give false data to regulators. A former managing director at Citigroup sued the bank and its chief operating officer on Wednesday, alleging she was fired for opposing what she said were attempts to give regulators false information. Kathleen Martin, a former managing director Citi hired in 2021 to help with data issues, said in a lawsuit that her supervisor, COO Anand Selva, wanted her to hide critical information from the Office of the Comptroller of the Currency about the bank's data governance metrics. Wow. And for the 1,000th time, JP Morgan will pay $100 million and admit it broke U.S. Commodity Futures Trading Commission rules in connection with trade reporting lapses, the regulator said on Thursday. The bank discovered and reported to the agency finding significant gaps in its trading data and order surveillance in June of 2021, in some cases dating back to 2013. Regulators found the gaps meant the bank violated rules for CFTC registered entities on reporting of trade data, regulators said in their order. But the former chair of the SEC, he's not concerned about things like that. What offends him was a tweet from Roaring Kitty that may or may not have kicked off a rally in GME and AMC. You see, guys, they ignore what goes on Wall Street. Retail investors are the problem. This was the rationale behind taking away the buy button at Robinhood. Don't blame the guys naked shorting American companies so they can profit from the misery of the pandemic. Instead, blame the people that liked the stock and decided to hold. From the 14th, with GameStop share price skyrocketing, a former SEC chair explains why the actions of Roaring Kitty and resulting meme stock frenzy bother him. You know, not the fact that Citadel's been busted 60 times in the past 15 years for breaking and violating securities rules and laws with impunity, or JP Morgan, I mean, what is this, the 1,000th time they've been busted? He's not bothered by those kind of things. Lately, I'm sure you've been hearing a lot about the House Financial Services Committee, and I'd like to make a comment about the different subcommittees. Okay, they've got like 6, one on capital markets, financial institutions and monetary policy, digital assets, financial technology and inclusion. Then they have one national security, illicit finance, and international financial institutions. But here's the one I want to drill down on. Subcommittee on Oversight and Investigations. That's interesting to the apes, right? So who's the chairman of the Subcommittee on Oversight and Investigations for the 118th Congress? Well, it's Bill Huizenga from Michigan. I thought you guys would like to know who donates to Bill's campaign fund. Well, near the top, it's the Blackstone Group with $19,800. That's the distressed credit private equity fund that backs Antara Capital. Without Blackstone, there would be no distressed credit hedge fund Antara Capital. That's right. In the 10th spot, it's Virtu Financial, the liquidity fairy Doug Sifu with $10,900. Enough said. Then in 12th, it's Apollo Global Management, the shitty, disgusting, distressed credit private equity firm where we got lowlifes like Leon Black and Adam Aron from. They kicked in 10 grand. Tied with Apollo is Nomura, a short seller of AMC in the past. Then down in the 48th spot is Citigroup with 8 grand, a short seller of AMC, and of course our chief investment banker, the authors of The Ape, its conversion, and the reverse split we never needed to do. That worked out great for us. The pounce. Today we pounce. Then he got 6,600 from liquidity markets. I don't know who they are, but I already don't like them. And then there's the giant BlackRock, whose Citadel accused the SEC of using to manipulate GME and AMC. And of course, Bank of America, Kenny's prime broker and top lender, and also a former short seller of AMC. Now, guys, we just looked up one of these clowns, and it's a train wreck already. Do you see now why I focus on swans and not regulators to save us? I rooted for it all. Phase 6, NSCC rules, the CAT system. I'm still rooting for CAT, but the deck is always stacked against us. But when a swan rolls in and ruins the party, then these same politicians will turn on some of our enemies because you have to blame somebody when it all goes wrong. So what happened on Thursday? Let's check in with Yahoo Finance. Stocks slid from record levels as interest rate worries dominated investor sentiment after NVIDIA's blockbuster earnings failed to spur a broader market rally. NASDAQ fell about 0.4%. S&P 500 dropped nearly 0.8%. But the Dow, it dipped more than 1.5% or 600 points for its worst day since March of 2023. I blame Boeing for that. NVIDIA's shares popped more than 9% to top 1,000 for the first time after the AI bellwether blew past Wall Street's sky-high forecasts for first quarter earnings. The chip giant also raised its guidance, easing fears that AI demand might be losing steam. Stocks had slipped on Wednesday after Fed Reserve minutes reignited concerns over the path of interest rates. Economic data on Thursday was on the calendar, furthered that narrative. The S&P Global Purchasing Managers Index, or PMI for May, came in at 54.4 versus 51.3 last month. The flash reading, which came in higher than economists had expected, showed business activity accelerated at the fastest pace in 2 years, despite the Fed's efforts to quell price pressures. So an article came out today in Variety where this reporter interviewed Adam Aron in Vegas at Carmine's. It's a good read if you're in the mood. It's titled, "We're Still Here, How AMC Theaters is Struggling with $4.5 billion in Debt and Surviving Thanks to Taylor Swift, Viral Popcorn Buckets, and More." I did pull out one quote for you. Adam said, "We're aware of our current circumstances, believe me, but it's not going to stay that way. It's the first time in 4 years that I've been able to look ahead and say with some confidence that it's not going to be atrocious." Okay, guys, that's your leader. Looking forward, not atrocious. Completely silent investor relations department, but it's not going to be atrocious. So we've got that going for us. I hope you're not looking for any discussion about Wall Street forces driving us down 99% off our highs. You'll be very disappointed. It doesn't say if Adam whipped out his schlong during dessert. Now, here's some good news for our business. AMC CEO Adam Aron says that Deadpool and Wolverine, starring Ryan Reynolds and Hugh Jackman, has already hit a record ahead of its opening in July. AMC is enjoying record first-day sales for the forthcoming movie. That's right, guys. I know some of you don't think this is important, but let's add this news to a huge turnout for Memorial Day weekend. Then T+1 deadline on Tuesday, the 28th next week. Then maybe the CAT compliance goes live next week on Friday if they don't completely declaw the CAT. And who knows, sprinkle a swan in there and maybe we've got something. Uncle Frank says, leave the pussycat alone. Black Swan Fund warns not to be excited for Fed rate cuts, since it'll be when the greatest credit bubble in human history pops. For investors excited about eventual rate cuts by the Fed Reserve, thinking they'll provide a tailwind for risk assets, a $16 billion hedge fund warns to be mindful of their wish. Mark Spitznagel is the CIO and founder of the hedge fund Universa, which focuses on risk mitigation in the face of a black swan event. In an interview with Reuters, Spitznagel calls hopes for a rate cut a case of be careful what you wish for. Also from Wednesday, I know you guys think I'm swan crazy, but they're using the term in headlines more and more, aren't they? The black swan risk now is a U.S. recession. From Bloomberg, Christopher Waller, governor of the U.S. Fed Reserve, recently stated that in the absence of a significant weakening in the labor market, I need to see several more months of good inflation data before I would be comfortable supporting an easing in the stance of monetary policy. His statement raises the stakes for investors wedded to the Fed ensuring a soft landing view of the U.S. economy. Wait a minute, guys. What's this from Thursday? A really bad sign for commercial real estate? Losses pile up in top-rated bonds backed by commercial real estate debt? This chart depicts office loans falling behind on their payments. Now, you tell me, does that mean more unrealized losses on our already struggling banks? Stay tuned. Can't kick this can forever, boys. And you can't ignore BRICS forever. America's fourth largest bank warns of economic crash amid the ongoing geopolitical shift brought about by the BRICS Economic Alliance. America's fourth largest bank has warned of an impending economic crash. Specifically, Citigroup's chief U.S. economist Andrew Hollenhorst has spoken with CNBC regarding his concerns for the United States and its economic fragility. A little more on that from Coin Tribune. Danger for the dollar. The BRICS confirm the development of a common currency. It was known that the BRICS were considering a currency. This time, it seems it's really official. In a strategic move aimed at reshaping the global economy, the BRICS countries are actively working on creating a new currency. This development could mark a major turning point in the fight against the dominance of the US dollar and have profound repercussions on international trade. As emerging economies seek to reduce their dependence on the dollar, this initiative stands out as a significant challenge to the established economic order, with potential implications for the entire global financial system. Now, guys, this may turn out to be nothing, but I want my subscribers to be aware that key trading executives over at Goldman Sachs are migrating over to Citadel. Check out this article. A new Goldman Sachs partner who disappeared in November resurfaced at Citadel. From the article, it's a partner year at Goldman Sachs. The last time the firm engaged in a round of biannual partner promotions was late 2022. And when those promotions happened, the new partners included Rupan Yadav, a graduate of the Indian Institute of Technology who worked for the firm for 17 years. Yadav, who was based in New York and worked for Goldman Sachs' electronic trading division, didn't hang around long after receiving Goldman's ultimate promotion. 11 months after officially making partner, he quit. He's just reappeared at hedge fund Citadel. Citadel didn't comment for this article, but Yadav's social media says he's the head of electronic trading at the firm starting now. He spent the past 5 months on gardening leave. You can't make this shit up. Yadav's reappearance is a reminder that as Goldman doubles down on prime services and electronic equities trading, its talent is in danger of defecting to the big hedge funds it wants as clients. Mark Malish, Goldman's head of equity syndicate for Europe, joined Citadel in February. There are many others. In 2020, for example, Tom Schwanars, Goldman's lead for equities execution, algorithms, smart order routing, internalization, and analytics, left for Citadel pre-bonuses, where he's been head of execution research and engineering ever since. All I've got to say about this is if you think you can poke Goldman Sachs in the eye without attracting the attention of Goober Gensler, you got another thing coming, Kenny. The war on Wall Street may be heating up, and that may be good for us. Would anyone like to hear some good news for a change? Coinbase resumes XRP trading for New York customers. That's from the Cryptopolitan. Paul Grewal, Coinbase's chief legal officer, announced the news on Twitter saying XRP trading on Coinbase is now live again in New York. This comes after XRP trading was suspended by the exchange for 9 months due to regulatory problems. It seems like all our problems are due to regulatory problems these days. They refuse to regulate the markets, but regulate the crypto space by suing everyone for rules that don't exist yet. 16 hours ago, Ripple prepares for SEC lawsuit outcome. XRP climbs past 51. And then 9 hours ago, XRP set for rally after Coinbase listing in New York. And then 8 hours ago, will Ripple versus SEC finally get clarity with this new bill? I wouldn't hold my breath on that, but at the time of this recording, I've got XRP at 0.5336, up 1.16% over the past 24 hours. Breaking today, I'm sure you've heard, SEC approves 8 Ethereum ETFs, including BlackRock and Fidelity from the block. I'm telling you, the last thing we want are these Wall Street assholes in the crypto space. They're already turning up on the New York Stock Exchange list of threshold securities, but it's too late now. They're here. And by now, I'm sure you've heard, U.S. passes crypto bill despite warnings from the SEC, then from CoinDesk, SEC's Gensler going rogue in solo quest to stop U.S. crypto legislation. From the article, the U.S. House of Representatives on Wednesday passed a bill that aims to create a new legal framework for digital currencies. Despite an unusual warning from the U.S. securities regulator, it could create new financial risks. The Republican-sponsored Financial Innovation and Technology for the 21st Century Act passed in a bipartisan 279 to 136 vote. It is not clear if the Senate will take up the measure. See, guys, Gary doesn't like people playing in his sandbox. He is a megalomaniac. I'm telling you all, Gensler is the worst thing that ever happened to U.S. markets, and the sooner he's out on his ass, the better. Well, guys, you could be sure that every time a hedge fund takes the pipe, Uncle Frank will tell you about it. Sagante to shut as insider trading charge draws redemptions. There's that word again. Sadler and firm charged with insider trading in Hong Kong. The block trade king built one of Asia's largest hedge funds. Simon Sadler's hedge fund is shutting down and returning capital to investors after an insider trading charge in Hong Kong sparked concerns about a flood of redemptions, according to people familiar with the matter. So long, Simon. I bet Investor Place hated to post these headlines. The cost to borrow Faraday Future stock is climbing again this week. MMAT stock surges as lawyers back up naked shorting allegations. FFIE closed up 6.25 on Thursday and added another 5.875% after hours. MMAT closed down 7.52%, but is still up 25.88% over the past 5 days. I see some interesting legal actions in the pipeline for AMC. You never know, one of them might get some traction soon. AMC rallied briefly Thursday to a high of 518 and then dove to a low of 455, where it closed down 51 cents or 10.08%. On no real news, of course, other than hit pieces. The market was down, so they hammered AMC down too. This isn't price discovery or a battle between buyers and sellers. This is manipulated bullshit. I have no confidence in this market or its regulators. Today is options expiration day ahead of a 3-day weekend, and unless something adverse happens to the cartel of organized short sellers, they will try to keep it under or around 450, which is max pain, which is a nickel away from where they closed it, right? At the time of this recording, I see 750,000 shares of AMC available to lend and short at a fee of only 3.24%. It's 5:45 here in Chicago, and I've got AMC at 463, up 1.76%. Let's hope that it holds. Well, guys, 2024 is almost half over. Can you believe it? And I thought I'd mark the occasion by running through the year-to-dates with you. S&P 500, 5267.84, up 11.1% year-to-date. The Dow at 39,065, up only 3.6% for the year. NASDAQ, 16,736, 13.3%. Then we got Bitcoin, 66,730, up 52.6. Ethereum, 3679, up 57.2% so far in 2024. Gold stands at 2,333 as of yesterday, up 12.6%. Oil, 76.88, up 7.2%. And as of yesterday, I have the yield on the 10-year Treasury at 4.479. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.